What is going on, guys? So today I'm going to be breaking down how I made many thousands, several thousands in the market here today. Don't get it twisted. Trading is not an easy thing. It's not just some cookie cutter thing where you're just printing thousands out of thin air and that's just it. It's a psychological battlefield every single time you come into the charts. All right? So don't let anyone tell you different. Now, can you become consistently profitable in the manner I am and make thousands and thousands of dollars on certain days? Yes, you can. But it comes from waiting for opportunities such as what I'm going to teach right here. What I'm going to teach right here is one of the models that repeat the most and are the most effective, simplest models you can ever think of in this market. At least at a minimum, 3 of them perform every single week. So let's dive straight into it. Show you guys what the logic and narrative was. Without logic and narrative, you don't have anything. We're going to be diving in on this piece of price action, classic model number 4. Before I tell you about this model, before I tell you about the trade, let's talk about what happened earlier. How the day started off. Why I said it's not always just super easy. It's a psychological battlefield. I'm going to pop the screen recording somewhere around here. You'll see it. Showing you exactly what went down today. Essentially, I went from what should have been a $6,000 day all the way down to a $350 day. Crazy profits being made. Price comes down, tags my trailing stop loss and profit, and we have one of the most crazy 10 a.m. news raids I've ever seen in my life. Smashes through all of our Model 3 targets, right? And immediately as soon as that happened, what did I do? Done. Close the live stream, close my laptop, done. I'll come back in the PM session. I'm not interested in chasing anything here, right? Because all this type of stuff right here does, when we have craziness in the market, all it's going to do is one of two things. Generate emotions, or number 2, entice you to abandon your trading plan and strategy and not wait for stuff like this, all right? So thankfully I did not do that. I got stopped out in profit. I accepted it. It was kind of hard, obviously missing out on the 6K, but you live to see another day. There's always going to be another opportunity. The sun's always going to shine again. That's the thing about it, okay? So as long as you don't chase losses, you can be consistent in this game, truly. Nothing's 100% win rate, but you sure as hell can be consistent by managing your emotions. So we fast forward, all right? We obviously have a severe bullish run to the upside, okay? And then this happens right here. Look at these two 1-hour candles right here. We create a relatively equal high sensation with these 2 wicks, and then we drop down into an hourly fair value gap. And this is where the journey begins when I'm scouting out my model. For model number 4, I want to see an hourly or 15-minute fair value gap delivered. Boom. We have it delivered right here. Oh, but what about the rest of the hourly gap? It's a large one. I don't care about that. As long as I have the time-based moves, narrative, and logic, all I need is at least the upper portion of the hourly gap to be tapped. That's the higher time frame key level that I'm using. All high-quality models start with a higher time frame key level. So once I see that delivered, I'm immediately scaling anywhere from the 5 down to the 1-minute chart. In this case here, call me a 1-minute chart warrior all you want. The 1 minute was all I needed. All right, so let's take a deep dive inside of this. First of all, this trade is nothing without the timing aspect. And when did it perform? Right inside of this really random macro. Why it's what are macros? It's some flashy, course selling term. You're wrong. Macros are very efficient. They work. Why? Let's back it up. What's going on around these macros? In this case here is 1250 to 110. We're closing on the previous hourly candle and we're opening on the next. So I'm anticipating a smaller scale version of PO3. We're closing on the hourly candle. What did this hourly candle do? What is it telling me? It delivered our higher time frame key level. All right, and based on the logic that I'm about to show you guys, I'm anticipating this hourly candle to perform bullish power of 3 to the upside. Okay, so that's why macros are significant, because all this is going on with the hourly candle openings and closes. Simple. So the macro powers this model, but let's take a deeper look into what actually made this so effective. I'm mapping out these lows right here. Probably just some random lows, right? Oh, you just, you saw a sweep on the lows and, that's why you wanted to take the trade. You're right, but you're also wrong. These are very specific lows. Time-based sell-side liquidity pool lows, relatively equal lows, swept. Now, what I'm watching is this powerful phenomenon. We're diving into a higher time frame key level. Remember, that's that tan shaded area. Meanwhile, we're smashing through a time-based sell-side liquidity pool. Why is this time-based? Because it's the lunch lows from 12 to 1 p.m. What's the low inside of it? Right here. So what's taking place? We're enticing breakout artists to short this. And we're also reaccumulating more long positions from the prior move up to then send us back above. And here's when things get interesting. We have all this stuff here, but what makes this such an easy trade, yes, easy, is what we had in the opposing end. Do you have to play any guesswork of if these are clean highs or not? No. Look how clean these highs are. Relatively equal highs. We had a trend line sensation in the market right here, right? So anytime, and not to mention triple top up here, anytime you have a set of smooth highs or like a trend line to a target in the opposing end, when you see this type of thing, there you go. Take the trade. Okay, wait for obvious opposing liquidity to be generated when you have context like this. It's going to be your easiest trades every single time. Inside of the macro, what do we have? Well, there's several other factors that make this a time-based move, but for now, for the video's sake, we're just going to say it's inside of the macro. Time-based move to the upside. Is this, meandering around, trading side by side, wicking around, tiptoeing? Hell no. Huge sudden move to the upside. Creates 1, 2, 3, 4 fair value gaps. I want to see at least 2 to 3 fair value gaps created when we have a light bulb move like this. And we had that. I waited for this first little small baby retrace. Okay? And there was my long. What was I targeting? Was I first of all, was I needing, right, some type of move the whole way up here to get paid? Nope. Matter of fact, I took profit on 2 accounts right around these internal highs. Let another one ride a little bit higher. That's it. I don't need the full, targets to be hit. I don't need the absolute high ran. All I need is something like this. So, there it is. I set my stop loss. Why is my stop loss right here? Because it's weathering this down candle, this fair value gap, this volume imbalance, this fair value gap here. So it's weathering at least 3 PD arrays, fancy word for building blocks that get us to our targets, right? So for example, to keep it simple, all I'm looking for is fair value gaps, right? These spaces in the chart, and down candles / order blocks. As long as my stop loss covers at least 3 of one of those 2 things, so for example, 2 fair value gaps and this down candle, that's a valid stop loss placement. Okay? So that's going to wrap this up here, guys. Don't overcomplicate it. Study this, back test it, forward test it, do all that good stuff, collect data, and you'll be mind blown. So, I don't know. I hope you guys got something good out of this. I hope you took notes. See you guys in the next one. Hit that like button for more. Peace out, guys.